Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning, you're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we're coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a very, very quiet backdrop as far as Wall Street is concerned. It did not look like it would be a very quiet and quite close, actually, I should point out, when we were closing here at 3:30 yesterday. But that is what we have in terms of a handover. We are coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me, my colleague Surabhi and Nigel. Guys, hi, morning.
Hi, morning, folks. While we're focusing on the market, I'm also focusing on the clouds. So I'm wearing colors of the season because it's sort of, blow hot, blow cold kind of weather in Mumbai as well, right? With some rain here and there.
Well, that's right, and it's May 20th, so we're getting to the fag end of earnings. The countdown, last 11 days, I think so.
Yeah.
And then we'll be done and dusted. So, bright times, I think. So, global markets pretty okay. GIFT Nifty suggesting an uptick. So, Surabhi is happy with the rain. And towards the end of earnings season, which hasn't been that bad, I think so.
But I think the weather, guys, it's like a...
It's all over the place.
It's a sauna.
Yeah, it's a furnace.
It's a sauna. It's a, just...
It teases you with the clouds. And then you realize the temperature doesn't match up with the look.
For those of us who work inside in air-conditioned offices, it's great. But people who've got to be outside,
It's really tough.
Difficult.
It's a tough one. Well, let's just quickly run you through what you need to know as you begin this new session. You basically have the S&P now, which is on a 6-day winning streak. This is after last night's almost unchanged close. I mean, nothing at all on the S&P. So it's there. You can see it, 0.09. But the important thing is that you had a 1% drop at the open, which was fully recovered right there. It didn't... there are some data points indicating that retail buyers in the US, just like retail here, they were big buyers of stocks into that 1.5% drop at the open that we saw. 10-year yield was down about 3 basis points to 4.45%. But from yesterday, Asia, that means that from the highs on yields on the 10-year, we got a 12 basis point swing from Asia high. So finally at about 4.45. You also had the dollar index, which is about 100.44. So, it looked like yesterday evening, 6 p.m. our time, when you looked at how Europe was trading, how US futures, etc. were trading, that are we going to get one more of those episodes of, US assets being sold? But it did not turn out that way, and some of those dips were bought. Is the concern all done and over with? Absolutely not. And I think we'll need to watch this space closely. Oil prices were flat, $65.50 is where oil left off. Lots of Fed officials spoke, by the way, and they all kind of expressed concern about inflation, saying that they need data over the next couple of months to make any determination. This is the thing. If you think about it, April 2nd were supposed to be reciprocal tariffs. Any data before that, we had to discard because of things like front-loading, etc. People would stock up in anticipation of the April 2nd tariffs. Then April 9th, you got the pause. So any data after that you had to disregard because, how do you make sense of it? Will exporters push out more? Will importers hold on? Now you got the US-China sort of pause as well. So data pretty much has been, tarred by all these, start, stop as far as tariffs are concerned. And that is the reason why some, especially, people like Williams, Bostic, etc., who spoke, they said that we'll need at least 3 to 6 months to assess the impact of tariffs. But the message is clear. They are worried about inflation. It's just not clear whether they should trust the data which is coming out now to make that determination. Now, President Trump, he said he spoke with Russian President Putin, and he shared an update on Truth Social, almost call minutes with Putin. He said that ceasefire negotiations with Russia-Ukraine would begin immediately. He said Russia wants to do, in his typical style, large-scale trade with the US when this catastrophic bloodbath is over. So that was the post, as the specific line there. So we'll see how this goes. But, it's good news in terms of really the casualties which we see on a daily basis in that war. But a final deal, let's see what really comes our way. Just to tie in the levels here then, the Nifty support stands at the 40-hourly exponential moving average, which is now moved to about 24,811, not very far from where we are yesterday. On the upside, we need to take out the 78.6% retracement of the entire fall, which stands at 25,310. So we'll see if the market's in a mood to make a push. Nifty Bank, it attempted to break out above the 55,500, but did not close above it. We left off at 55,420. Support here is the 40-hourly exponential, which is 55,131. And here we need to take out 56,098 for, a broader up move to begin once again. So in a bit of a no man's land, I would say. And we just still need to be a bit on watch as far as the US bond markets are concerned, if you are worried about anything hitting us from a global market perspective. GIFT Nifty, I think it's indicating a 100-point higher start. We'll see if it sticks and if you're able to build on it. Surabhi.
It's looking good, actually, across Asia, and that's what the implied open is also indicating, that the bulls will perhaps start their charge again today. And most of the markets are building on the fact that Wall Street managed to eke out a little bit of a gain even yesterday. So if I'm looking at whether it's the Japanese market up about 0.5%, or the Hang Seng, which is up about almost 1% right now, Taiwan, most of the markets, Singapore, everything's up and about. By the way, in Hong Kong, today the world's largest battery maker has listed. CATL as the company's, the abbreviation goes, and it's been a good listing, 14%. It's the largest listing this year in the world. Company has managed to raise $4.6 billion. So that's, adding to the sense of excitement in Hong Kong today. Anyway, there's a fair amount of data to go over as well. First and foremost, the news came in on the rate cuts in China. This is the first time in 7 months that the PBOC has moved on rates on the 1 and the 5-year loan prime rate. The reduction is 10 basis points on each of these. So the 1-year LPR now stands at 1.4%. The 5-year loan prime rate stands at 3.5%. By the way, Chinese-backed, state-backed banks, they've already started cutting deposit rates by a greater measure. Almost 25 basis points rate cuts announced already by several banks which are backed by the Chinese government. On China-US trade, it's usually blow hot, blow cold. And yesterday, late evening, post our market close, China came out accusing US of trying to sort of unsettle the Geneva Accord, or the agreement or the understanding that was arrived at in Geneva. Now, China is accusing US of undermining the preliminary trade discussions because of the US warning against use of Chinese chips, semiconductor chips. In particular, the US has singled out chips that are made by Huawei. And China is not taking too kindly to it. So there was a statement by the Chinese government spokesperson saying that if the US insists on its own way and continues to substantially damage China's interests, then China will take resolute measures to safeguard its legitimate rights, and so on and so forth. So there's a bit of a skirmish there, verbal skirmish that's been going on. Let's see how it goes. For us, it's been a consolidation last couple of days. Friday and Monday, the market hasn't done too much, but individual stocks, there's lots of action. Let's see how that plays out. On the flows front, things are a little quiet as well. There was a sell figure of about 525 crores by the FPIs yesterday. Domestic institutions also on the sell side sold off stocks about 238 odd crores. So little quiet in terms of the net flows picture in the cash market. I'll keep watching out for defense stocks. Yesterday again was consolidation in the defense space, but the numbers have been looking good. BEL's numbers, watch out for this. Revenue up about 7%, and the margin has improved from 26.7% to almost 31%. So let's see. This space continues to be in focus as well. Nigel, how are you looking at things?
Well, yesterday the institutional data was something that was a little bit surprising because both of them turned sellers. But there's one point out there. If you look at their gross participation yesterday and you compare it with an average for May, actually both the FI as well as the DI participation was relatively lower if you compare it with the averages earlier. So close to around 16 to around 20% lower is what their participation was yesterday. So I won't read too much into the institutional sell number yesterday. What about the positioning? Well, on index futures, both of them are on opposite ends, not very, very aggressively. Though, in fact, the FIs are net short with close to around 23,000 contracts on the short side. The clients net long with close to around 10,000 contracts. However, the FIs on stock futures, they went ahead. They added some short positions and they unwound some long positions, which is telling you there was a swing factor there of around 60,000 contracts towards the short side. Not so bad. Well, moving to the options data then. The PCR, I made this point just last week that it had moved to around 1.3. And at that point of time, it was calling for some kind of cooling off because the upper end of the band has been around 1.5. Now, the PCR has come down to around 0.8. That's actually good, and that's a positive actually, because the lower end of the range is around 0.65 to around 0.7. And just take a look at the options data. You know, the 25,000 call, that's added a good amount of open interest, around 50 lakh shares. The premium over there is around 125 rupees, which is giving you the crucial resistance mark. So on the upside, you want this 25,150, 25,200 odd, you know, to get taken out. If you look at the resistance level, just plugging in that premium of them, this is the crucial mark that, you know, the bears will want to defend. So the bulls need to get past this and then, in fact, drive on from there. However, support levels you're looking at, the previous resistance becomes a support level. Even if you look at the options data, it comes in the vicinity of around 24,800. On the Nifty Bank, there are crucial levels that you're looking at. One is the 20 DMA. That comes in at around the 55,000 odd mark. However, last week's reference point is around that 54,500. And the point I've been making for the last many weeks is that the Nifty Bank needs to get past this 56,000 mark. That's what starts the fresh move in terms of an uplet. However, for today, I'm going to be looking at the metal index. And the reason is the Chinese, again, they're cutting rates. They're trying to push up that economy. So normally you have a positive rub-off on metal stocks. So that's why the index that I'm looking at for today will be the metal index.
All right, Nigel, thanks very much for that. So keep an eye out on the metal space as we begin this session.